Our next speaker asks whether we are standing at the edge of the next internet scale shift, this time in money itself. Finternet, money without borders. Is Finternet the next internet? May I please call on stage Mr. Sanmesh Kalyanpur, Director at Finternet. Can we have you on stage, please? Guys, come on, let's hear it for him. And soon we're going to break for lunch.
Hey folks, I hope I'm audible. I also know that everyone is hungry here for lunch and not hungry for tech words. So I'll keep it as non-tech as possible so that everyone will be able to understand what we are doing. So quickly, directly getting onto this. So Finternet is a part of Networks for Humanity. So this is basically the same team that built Aadhaar, UPI, account aggregator, and a host of digital public infrastructure for India, and we have exported it across the globe as well. With Finternet, what we intend to do is, it's an international effort to build open, interoperable, population-scale digital infra, and we are working across business, tech, and policies. We are backed by Google.org, Asian Development Bank, to name a few. We are having this conversation right now because financial innovation has always been the talk of town for India. Asset types are expanding, cryptos, all different kinds of assets are coming up. And because of this, superior complexities are also coming in terms of supervisory capacities. So this is the best time to evolve our financial systems. So yeah, this may sound very nebular, but by the end of the presentation, I wish to kind of showcase in simple words what we intend to do. Internet today is kind of, it lets information go freely, right? I can go to yahoo.com, I can go to Google, I can go to Facebook. And now, because of mobile coming in, it's very easy to kind of share information. Finternet intends to do the same thing, but for different kinds of assets. Now, for example, just talking about the origins of this and what is the genesis of all this. Today, finance is split into various categories. You may see payments, you may see loans, investments, lands. Everything on its own accord, on its own road is doing pretty well. Like payments, I can send UPI to some guy here, and he'll get it instantly. Loans also, personal loans, you get it within 5 minutes here right now. Well, home loans is a different story altogether. Investments, again, you have Grow, Zerodha's of the world doing it. But the main problem is they don't talk to one another as easily. Like, for example, I have 2 sons. I can't send them gold digitally because I want to send them gold. I can send them mutual funds as well whenever I wish to, as seamlessly as payments. So this is actually the kind of problem which exists in today's system. Let me kind of expand on this. It happened to me as well because about 3 months back, I wanted to buy a home loan. The bank asked for my bank accounts and all those things. There was a separate property guy going there to the property to understand what the valuation was all about. There was technical checks, legal checks, different kinds of things, which eventually took me 2 to 3 weeks to get the home loans. So I get 5 minutes personal loans, but I get 3 weeks home loans. So you have repeated manual checks, delays in supervision, and a host of things because of this disconnected economy. So what is the main thing to do? Modern finance shouldn't be like this, right? It should be kind of very interconnected where all kinds of different assets go on seamlessly and can exchange information seamlessly. Do we need an app to do it? That's not the answer. We need an infra where different kinds of apps, different kinds of banks, capital markets, companies, everyone kind of sits on top of it so that seamless exchange of information can come about. So how do we create this modern infra? That is what the builders of Internet, owing to our experience, we were kind of dabbling into different technologies and trying to understand what are the different kinds of technologies which can enable this. That's where we kind of came upon 2 tectonic shifts which are happening in today's world. One is AI. We are experiencing it, so I won't give any gyan on that. But tokenization is something which is kind of still very nebular in certain regions and advanced in certain regions as well. So a mix of both these things, it's very symbiotic and it can create the finance of future. Now, the next set of slides, what I'm going to do is, first I'm going to talk about what tokenization is all about in simple words, so that everyone can understand how it can impact your lives. And then from there, I will go on to talk about different kinds of industries. How will it benefit you? How will it benefit a bank? How will it benefit a mutual fund? And eventually the country as well. So what is token? Now, for example, I have a physical gold ring, or for example, if this is a bar of gold, I'm not that rich, but just assume this. So when I can't go to every state and say, please mere se le lo, give me money or something like that, right? It's kind of very physical activity and it's filled with a lot of manual things, who will go and who will check. Now, the main thing here is, in simple words, what we do is we create a digital duplicate of the same gold ring, but which has transferability and verifiability in it. Now, let me explain on this further. Like, if I take a gold loan, if I take a gold biscuit, if I go to a bank is blessed by the regulator, right? The bank will have its own sampler, will say, okay, this is worth 10 lakhs. He will keep it in the vault. Now, what if the bank sends a digital receipt? That digital receipt says that, okay, this is dated this time. As of this date, this is worth this much. The quality of the gold is this much, and this is held by this particular ABC bank. Now, if that particular receipt is then floated across different banks and thousands of NBFCs in India, and everyone accepts those receipts. So what is happening is, one, you're standardizing it. Because you're letting a standards of acceptance, automatically transferability is enabled. So the advantage of all these things is, today you could kind of have a very dismantled system where you could go to a bank and avail a loan. Now, because I have the same receipt, I can go to another bank who's offering me a better gold loan to kind of take lending service. I can trade it with someone who has silver. Or if I want to make quick bucks in crypto, I can go and trade it with them also, if some countries allow it. Then I can keep it as collateral for kind of getting more loans for my MSME. If I intend to kind of create my own business after leaving Finternet, I can do that as well. I can fractionalize it. I have 2 sons. I can kind of fractionalize that, and otherwise it would have been a very difficult expense kind of to break the gold in 2 parts and give it, right? So those are some of the advantages which we have not seen before, but this technology allows it to happen. Right now, what is happening is, if you look at $700 trillion worth of wealth across the globe, only about 35 billion, and sometimes if you add certain currencies like stable coins and all, it becomes $350 billion. But this will kind of expand. It's kind of dimly lit right now, but it's kind of going to go about, and that's where the opportunity lies. So now, as I mentioned, I explained what tokenization is all about. Now I'll go on to the next chapter of things, where I intend to explain you all how is it going to impact you, how is it going to impact your industry, and eventually the country. In the agri segment, so I had this curiosity. I went to rural Sangli, I went to Chiplun. There are a lot of warehouses where kind of farmers come, they put their onion produce, they put all their things. The reality is that 95% of people there who kind of get all those grains to the warehouses are commodity traders. This is what really happens. The commodity trader will go and only have one bank whom he associates with. He will call that bank and say, I have 10 lakhs worth of onions. Can I get a loan? He'll say, okay, I can give up to 70%. Then he'll go to the warehouse. The warehouse sampler will say, okay, this is the valuation of it. And then that receipt is kind of given to the bank as a lien. And then he provides loan. But because of this, if you statistically look at it, for a $4.2 trillion economy of India, the volumes for e-negotiable receipts is only north of 1 billion, which is very tepid. Because of this process of lack of competition, lack of kind of opportunities. And imagine if the farmer is uneducated, he won't be able to understand it. Now, what if we turn around and reimagine this? We go to a warehouse which is kind of regulated properly, and we have 5 or 6 banks in the same pilot. The same agri guy goes there and puts all his onions out there. That same onion has, okay, the sampler says it's 10 lakhs worth and it's this quality, this is the perishable thing and stuff like that. And the same receipt simultaneously is floated across 5 different banks. And because it's kind of digitally floated with all the information and data points which the banks need, through business rule engines itself, they can automate it. So it's going to be as simple as personal loan, where personal loan gives you loans up to 5 lakhs because of your CIBIL score. Now, the same thing can happen because the token represents standardized data sets where you can underwrite it. And because kind of the regulated warehouse is also storing it, the blockchain technology will also kind of talk about where all the exchange of information happened. So with respect to risk mitigation as well, it's a win-win for the lender because risk mitigation is there. It's a win for the agri guy because he's getting more amount of competition, so he's getting finer rates. It's a win-win for warehouses as well because it gives a different business proposition for them in terms of an accentuation opportunity. Now, with respect to the second opportunity, you might see a lot of MSMEs, right? It kind of impacts about 30% of our economy, actually. Whereas, I think there was a research paper which said that more than 60% of MSMEs, primarily micro segments and minor companies, they have liquidity issues. They will go and I will eventually have one buyer who is going to purchase things from me, but he's going to wait, I have to wait for 90 days or 120 days. Right now, what is happening is there are two beautiful models which are coming up. One is simple kind of adding financing to it. Now, for example, I have to wait and the lender will say, okay, I'll give discounts. If I have to take 100 rupees, the bank will say, okay, take 96 rupees right now. And after 90 days, the person who has to pay me will pay the bank 100 rupees, and that's where bank makes money. I get quick money out of some return, and the eventual anchor has to wait. So it's a win-win right now. But the problem happens when, for example, it's a good win-win situation for tier 1, tier 2 kind of suppliers, where you have a big company like Titan or Tata Steel. Supplier number 1, supplier number 2, supplier number 3, all are famous. Banks won't have a problem. But supplier number 8, supplier number 9, supplier number 10, if I have a Balraj company, which is relatively unknown by a lender, he won't kind of give me proper rates. But what if Tata Steel or any big company provides tokens, like 1 crore tokens, and within that token, there would be a representation saying that this is backed by this anchor. In 90 days, each token will be converted into 1 rupee, and all those various caveats would be put. And because it's being spread by everyone, it's being split and given to all the people in the tier, they can liquidate it. And it can be liquidated against anchors, which can kind of enhance liquidity. So that's how it's going to improve these models. Then the third one, which is actually, this is a great story for us because we are going to go live with this within the matter of 1 or 2 weeks, which is securitization. Now, statistically, if you look at securitization, it's a $25 billion volume market. Last year, it got $25 billion market where 45% is direct assignment, 55% is pass-through certificates. Now, direct assignment comes under the ambit of RBI. In simple words, what it does is I'm a small NBFC. I have various modes of raising money. I can go to bigger bank to raise money and all, but that's a big proposition and very hazardous. What if I pool all my loans together? Imagine I'm a housing company, I pool 100 loans together for mathematical simplicity. Each home loan is 1 crore. I pool 100 loans together, which is 100 crores. I go to a bigger bank and say I'm selling it to you. And as per RBI mandate, at least 10% on each contract has to be retained by me. So I retain 10%, which is 10 crores, 90 crores I get upfront. The buyer, eventually the bigger bank has better top line, but I am getting much more liquidity. So I can kind of put it on stage and I can go and I can give more loans. Now the problem with these kind of scenarios in today, which is why it's not growing, is lack of standardization. The way I keep my Excel sheet versus the other bank will be very different. So we play Excel for 1 month. Not because of negotiation, but because of understanding what is the data set. Second, there are 3 kinds of repayment schedules. One of the customer, one of the investor, and one of the originator, which creates all sort of mathematical probabilities. What happens if it's prepayment? What happens if it's part payment and stuff? Now, today we have solved it by kind of creating standardized loan contract, where if, for example, 10 to 15 banks are on one side and everyone accepts the same loan token and it kind of, once the loan token comes in their LOS, it represents all the same columns. It can be negotiation over proper volume, not over understanding of data. And when you put in smart contracts to it, automated calculations can be on the go. So this can actually kind of seamlessly catapult the industry by 10x. That's the hypothesis we have right now with this. With respect to startups, because a lot of my friends also asked me, okay, what are the opportunities here? Now, 2016, we had a host of revolutions, right? 1991 reforms were there, which created Infosys of the world. There was the 2010s, where you had Google Pay, Phone Pay, building on top of UPI. Now, for example, there are asset trails like gold, fractional land, carbon. Someone will go and eventually build the unicorn for gold and silver or land. So that's where the opportunity lies for startups in leveraging Finternet. And lastly, the last point is where $130 billion is kind of processed in terms of remittance every year for Indians, especially across every state. Right now, it's riddled with a lot of problems. Transaction fees, 3 to 4%. It takes days in transit. Now, with stable coins and all coming about, you can have not near zero fees per se, maybe 1 or 2%. So it's a good, clean, half kind of battle won. It's in seconds, not in days, so it's kind of easily transferable. And rules are kind of directly put in. So a lot of regulatory supervision will be kind of easier to do. So that's how kind of I just showcased how Finternet, through that you can leverage not only 5 but different kind of levers using the same rail and have a multiplier impact on the economy. And with that, this is my last slide. Anyone who wants to know, so Nandan Nilekani was one of the driving forces for Finternet, where about 4 years back, he wrote in a paper with Augustine Carlston, who was the then Bank of International Settlements head. They wrote a paper which was well kind of received by a lot of regulators, and from there we started this entire thing where tech white paper came in. Last year at GFF, Nandan had mentioned that we will go live. And this year I'm happy to say that we are live with Securitization, which is going to go up next month itself. And we have also started Vouch.finance, which is nothing but programmable vouchers which can be done. Like in simple words, what Vouch Finance is all about is, there was DBT where I could transfer money. Then the next evolution came in where I could transfer programmable money. So that in simple words, tomorrow our Yojana is there where they're giving 2,000, 3,000 monthly. What is the guarantee I won't consume beer out of that money? But if I program it in such a way that only some kind of merchant can accept it, so I can only buy pharmacy from there or I can only buy fertilizer from there, suddenly my kind of inroads or my specifications get better. But in today's world, we are going a step further. What if, for example, government of Karnataka strikes a partnership with Claude or OpenAI and they say that, okay, I'm going to send in vouchers so that people can use AI at length for all the students. Now, is there a infra ready to kind of send it? What if, for example, you can utilize Vouch, where you can send multiple kinds of vouchers, not only AI vouchers, but tomorrow, for example, tractors. A tractor voucher can be given where a tractor can be used for 1 day by the farmer, so he doesn't have to buy it. So these are some of the possibilities which can be unlocked using latest products from our stable. So with this, I would like to end. Thank you very much for being a patient audience, and I would love to answer any questions if there is any. Yeah. Sorry.
We actually don't have any time for questions, but you can network with sir later. And sir, I request you to stay back on stage because you're a part of the panel. Yeah. So please take your seat, sir. Guys, can we hear it for him, please? So we are having a very interesting panel discussion next, and I request everyone standing around there, can you all please join us for the panel discussion? After that, we're going to break for lunch.